Today I'm looking at KB Home, a home building company. KB Home will report earnings today after market close. The company has a moderate buy rating with 9 analysts recommending a buy and 8 analysts recommending a hold on KBH. That's a rather middle of the line analysis on this company. Even the 12-month price target is fairly middle of the line, with a $40 price target on the high side and a low of $36. With KBH closing at $37 yesterday, the 12-month price target is fairly narrow, providing an 8.1% upside to the high end of the target and a downside risk of 2.7%. The average price target is at $38.07, which is a 2.9% upside. Of course, there are no guarantees that the stock will reach any of these targets, or for that matter stay within the targeted range. The stock can always break through the targets on either the upside or the downside. Just look at Tesla's stock performance over the previous few days. To that point, please always research the company yourself before taking a position in any financial instrument. This is not a recommendation on KBH or any other stock. Analysts are estimating an EPS of $1.28, which is much higher than the estimate for Q4 of 2018, which was at 93 cents. The current estimate is also higher than the actual EPS for that quarter of 96 cents. For that quarter, the actual EPS was 3.23% better than the estimate. However, for the last 3 quarters, the actuals have been much better than what was estimated. In the previous quarter, ending August 2019, the surprise was 12.3%, and the quarter before that it was over 30%. Are the analysts not reading the company or the industry correctly? Is the sector outperforming analysts' expectations? I have many questions, but sadly no answers. Let's turn our focus to the charts. The company seems to be trading comfortably around the 0 standard deviation line, with some movements to 1 standard deviation in either direction. Seems like a fairly stable trading range. The narrow range of the 12-month price target makes sense given the historical price movement of the stock. Of course, price performance is not a guarantee of future results, so look at the chart with a grain of salt. Implied volatility is in the 37th percentile and higher than the historical volatility. MACD is increasing with a positive trend, and the RSI is just below the oversold region. January 17th option IV is just over 50%, with a market maker move prediction of $2.04 in either direction. With yesterday's closing price of $37, that gives us a range of $34.96 to $39.04, which gives us a delta of 14 on the put side and 16 on the call side. If we were to sell a $1 wide iron condor at those deltas, we will receive 21 cents or 21% return, assuming both sides expire worthless. I have a slightly bullish stance on the stock, and I think the stock may go up after earnings. However, as the stock seems to be trading in a stable range, I may want to sell a longer term option and close it at a 50% profit. February 21 option has an IV of just under 33% and a $3.81 price movement prediction on the standard deviation model, which gives us a range of $33.19 to $40.81, corresponding to the delta of 16 on the put side and 26 on the call side. An iron condor will give us a 33 cent on a $1 risk. If we close that at a 50% profit, that would generate 16.5% return on capital. But the open interest and volume on the call side for that position is very low, so it's possible that iron condor may not execute. What are your thoughts on KBH prior to the earnings or even long term? Thank you for watching, and I will see you in tomorrow's video.